Verti's this podcast disclaimer: the information presented in this podcast is for entertainment, informational, and educational purposes only. It is not intended as legal, professional, or financial advice and should not be construed as such. Content and topics shown or discussed may not be accurate nor up-to-date information. Laws and regulations change frequently and vary by location, jurisdiction, and by nation. You should consult with a qualified legal or financial professional for advice specific to your situation. Listening to this podcast does not create an attorney-client relationship. The views expressed by the host and guests are their own and do not reflect the views of the podcast as a whole. The host is not responsible for any errors or omissions in the information provided or for any actions taken based on the content of this podcast. We are not liable for any losses, damages, or consequences arising from the use of this information. By listening to this podcast, you agree to hold the host and any guests harmless from any decisions you make, or from any losses, damages, or other claims arising from your use of this information.
All right, welcome back. I'll pass it over to you. I think we were onto something right before this, so let's continue that frame of conversation.
Basically, we're just getting into talking about dividend pay or passive income in general. A lot of times when we're looking into the future and we're planning for like when we retire, or even if just to supplement, our current living standards, we want to invest in something that kind of pays you a monthly income. And this was something that was really appealing to me when earlier on in my years, when I was just started working for the bank. It came up quite often, and it's like, it seemed too good to be true. It seemed almost like, oh, there's no downside to this type of strategy. Why isn't everyone going into this and using it? And that's sort of how it led me down the rabbit hole of like reading a little bit more into it, understanding what types of dividend payout programs there are. One of the main ones, I believe, and it might have changed right now, there's a list of all these high-paying dividend stocks out there. And you can Google it, and there's something called a dividend king. And dividend kings, or I think they're determined or given the title as king because they've been able to hold up their dividend payout for X amount of years. And so they get that title, and that's where people kind of put in a lot of their money to invest in.
Oh, that's interesting. Yeah, I just typed that in to just kind of see what would come up, and I'm trying to find if there's like a reference list. I mean,
yeah, I think the ones that come up for me right now as I'm looking is like Coca-Cola, like Johnson & Johnson.
Oh, right.
Walmart, like big companies, right? And when I looked into Johnson & Johnson, by the way, they own a lot of stuff.
Oh,
Same
yeah.
with Coca-Cola. They own a lot of stuff that's not just soft drink, and not just like, and for Johnson & Johnson, not just like baby powder. That's what I think of when I think of Johnson & Johnson.
Right, that's true.
But they own a lot of different things. So they're able to generate a steady income. And a little bit about, I could be wrong on this, but I'll give what I remember, what I've read back then. So the reason why companies pay out dividend it's because instead of growing their stock value like a tech company where they reinvest their money back into themselves to grow, they instead pay their earnings to their shareholders.
Right.
Because they've hit a cap, right? They hit a soft cap, right? Without major major correction or changes in their strategy,
Right.
business strategy.
Yeah.
They will continue to only make so much money, and so they can't grow like a small company.
That's true.
Same rate.
Right.
So if you compare them to like a growth stock, like most tech companies, they're not going to be able to outperform those type of stocks. So instead, they go into this mode where like, hey, we can make a steady income through our business, and to attract people to invest into us, we will pay them money to continue to have them invest in us. That's the idea behind dividend stocks, as I recall.
Okay, and thank you for that. And I'm looking at the Coca-Cola dividend history, right? And I think the last dividend they paid out recently was November 29th, 2024, and it was at about 48 to 49 cents per share, I believe. Which is okay. That's pretty interesting. And then and the reason I think we were talking about this earlier, which led into this podcast, was I was bringing up MSTY, or so-called MSTY, right? Which is the ETF that basically does synthetic options on MSTR related shares or stock. And their return on average is about 2 to 3 US dollars per share or per month, right? I'm looking at the way Coca-Cola does it, and it looks like they do it quarterly, because they do it like March, June, September, and then November. and it seems to repeat through history. So that's probably their way of doing it, which is pretty neat.
Yes.
Yeah. Okay. Interesting.
There's companies can choose different ways of issuing dividends.
Mhm.
For most of them, they will do quarterly because it's easier for them to do their, I believe, bookkeeping, and also it'll be easier for them to predict what the market trends are like. If they release dividends usually too often, which some companies do, they become unstable because not every month can they guarantee the same amount because there maybe one month there's some kind of shortage of something and they had to pay a little bit more, and then the next
Right.
month
Yeah.
people buy more of their product and then they get a
Sure.
little bit more.
Yeah.
So the quarterly sometimes it's semi annually, so twice a year, and sometimes
Mhm.
it's yearly. Some companies would do, right. It really depends on what industry it's in.
That's
I believe,
true.
anyways. Yeah.
Yeah. I looked up the top 20 high dividend stocks, and
Yep.
it's got some stuff here I've never heard of, but I guess one of them that we probably heard of is like Verizon Communications. And it looks
Yep.
like they
Mhm.
pay about maybe 7% approximately,
Yeah. Mhm.
which is interesting. I think comparatively
Banks pay a lot.
for, sorry, go ahead.
Sorry, I would say banks usually are on the dividend list as well too. They
Mm.
they tend to pay out consistently. Yeah.
Sure. Yep. That's right. And then I'm just thinking, like as I mentioned earlier, with MSTY, let's say on average they do $3 per share, right? And each
Yeah.
share right now is approximately $30, so they're about like 10% approximately.
Yeah. Yeah.
So
Which is
because
really high. Which is
yeah, that's
really
what I was
high.
wondering. Is that considered high or
Yeah.
not? And yeah, keep
It's
going.
it's really high. Like I that's why I'm a little bit. I know it's new. It's a new product, right? I know it's backed by something that's totally never been backed by before Bitcoin, right? Or
Well,
at least
not
the
not
company behind.
directly actually. No,
Not
they're
directly, but
yeah.
indirectly, right? Because it's playing on he's using he's underlying. It's still a investment instrument issued by MSTR,
Oh,
right?
sorry. You're talking
So,
about MSTR. I'm thinking MSTY.
oh,
So what?
MSTY.
Yeah,
Okay,
MSTY is
so
not
go ahead.
backed by anything. They're doing a synthetic options trade, which
Right.
uses U.S. Treasury bonds with something else to do a swap with a third party. So there's inherent risk in MSTY, right? The risk is is the fact that they're not directly touching any of the MSTR stock. They're asking
Yes.
another partner or whatnot. They're paying them to basically go do the MSTR stocks buying and selling potentially. Again, I'm not an expert
Yep.
on this, and this is not financial advice, folks.
Mhm.
And because they don't touch it directly, they basically just do basically a swap with their third party, and
Yep.
they basically have a contract to get the gains if there are any, or however way they handle the losses, right? So
Yeah.
there's that extra layer, and hence there's that extra level of risk. Back to you.
Yes. Um, and sorry, I didn't mean to say that it was backed by MSTR. What I meant was that they do the. Like, I understand the fact they do the trading
Mhm.
based on MSTR stocks,
Yeah,
and then from that they get a yield to give the dividends, right?
correct.
I think that's how MSTY works, right? But the trading of the stock itself is the company that owns Bitcoin. So in a way, if that company does well, which I mean, I think, full disclosure, we all own MSTR here.
Right.
We think that MSTR is going to do well. Then, therefore, by that type of loose connection, like the fact that they're trading MSTR stocks to get the best
Hmm.
of it,
Hmm.
is in fact, based on a company that owns Bitcoin. Like, so I
Right.
know they're not trading on Bitcoin, but they're
Yes.
trading with a company's stocks that are related. If you get what I'm
I
going
do.
with
I
this,
do. I think
yeah,
and you can correct me if I'm wrong. I think the understanding is that as long as there's volatility with MSTR or subsequently with Bitcoin, and they're always, I shouldn't say always, but up till now, Bitcoin has been volatile. That's known, right?
yeah,
The price at least. And then MSTR owns Bitcoin, hence MSTR is extra volatile. And so,
yeah.
in theory, as long as MSTY can capture the volatility of MSTR's stock price, then they should
Yes.
be able to make their dividend payouts.
Exactly. So that's the thing, right? I'm sure the people that are trading this MST, the people that are the fund managers or the people that are handling this fund, the way they're doing it is they know how this is gonna. They understand the volatility, right? Like because traditionally, like I want to just say why there's a difference here is because traditionally companies that pay dividends are ones that are generating off repetitive sales, something that's repetitive and that's known to the
Right.
public, right?
Right.
I know how many Coca-Colas I'm going to sell this month. Therefore, I know how much money I'm going to make, and therefore I know how much money I'm going to pay my
That's true.
shareholders, right?
Yes.
That's very like, oh, I know what's happening. But with MSTY, it's like these guys, like I know what I need to do to trade to make a profit on something that's volatile, right? They know how to trade this properly,
Hmm.
I would assume, right? And therefore, when they capture the ups and downs properly, that's where you get your yield. But
Yes.
I don't. Correct me if I'm wrong. I don't know if there's such a thing that does that in the market right now. Maybe there are. I just don't know too much about it. But it's definitely very interesting that Michael Saylor's created his company MSTR to be very volatile, and then
Right.
of course they're able to provide these additional investment instruments like MSTY to play on it.
Hmm.
Then it's like a new game, a new way of for you to look at it. And to
Yes, sure.
me, that then you asked me like before, or you posed the question: is 10% too high, or was it 10%?
Yeah, it's 10%
Right?
approximately.
And normally in a marketplace where you're looking at traditional companies, I would
Hmm.
say hell yeah, that's extremely high.
Interesting.
But maybe it's not for someone that does it with this type of company.
Sure.
You know what I
Yeah,
mean?
I see
Like
what you mean.
that I
Yeah.
don't know, and that's why it's fun because we don't. I don't really know, and it's good to kind of
Yeah, it is.
dive deeper a little bit into it
Right.
and kind of find out, hey, is it kind of out of the ordinary, or maybe this is the new norm?
Yeah,
And
that's
if
a good
that's the
point.
case, then it's something that's cool because, and once again, not financial advice, but
No.
you see how Coca-Cola was, I think, $67 right now per share, and you
Hmm.
said it paid out about 40 cents as dividend per share, right? If you bought it now, you might be like, okay, that's not too bad, right? 40 cents for every $67 I've invested. The stock kind of goes up over time. Seems pretty good. But you got to think about it. There are people that invested in Coca-Cola 10, 20 years ago when they bought a share for like a dollar or two and
Oh,
they hold a
right.
bunch of shares. Those
Right.
guys are laughing,
Yeah.
right? Because they're
Yeah.
like, man, this stock I'm holding, it's like a golden goose. It's laying me eggs every
That's
single month
that's
or
true.
quarter. It's a big difference, right? Big
Yeah.
difference between me going to buy Coca-Cola now versus someone that bought it 10 years ago.
Exactly.
So
Exactly.
this is why it's very interesting right now where MSTY is newer. It
Hmm.
could be, we don't know, right?
Yeah.
Where it's going to lead to. But if it's the start of like another Coca-Cola, wouldn't you want to be in there earlier versus later? Because
Right.
it might go up in value when people see there's a value there.
Right.
Then they might start going in the long run. Who's
Hmm.
to say, right? But that's where it kind of gets me a little bit excited, is to kind of see
Oh,
this
yeah.
type of product come out and see where it could go to.
Now, just to compare, right?
Yeah,
MSTY is an ETF offered by, I think the company's called YieldMax,
Yo
and
Max, yeah,
YieldMax actually does a few of these. They do one for Nvidia too. The Nvidia,
right.
the graphics card, or whatever chip company, and
Yeah,
and we all know Nvidia has been in the stock market news a lot because they're
hmm,
like one of the largest $1 trillion companies right now, right, due to the
yeah,
AI boom or hype or whatever you want to call it. And I just looked
yeah,
up YieldMax's equivalent because they have a similar dividend options based ETF for Nvidia. They call it
yeah,
NVDY, and I'm
mhm,
just looking at the historical dividend payout, and again, they're going by a monthly basis. Last time it got paid out was, I think, just somewhat recently, I think the 3rd of January of 2025, and that was
uh-huh,
about at around 89 cents, right? If I were
yeah,
to look back further, I think that ETF started somewhere in February of 2024. So again, it's only been around about the same time as MSTY, which is also their ETF product. But
yeah,
for NVDY,
yeah,
the price range it floats between somewhere between $1 to 2.5 or $2.60 as the highest.
the
So
dividend payout, right?
right, and you have to kind
Yeah,
of keep
yeah,
in mind that Nvidia is a highly traded, big market cap, right? And in comparison, MSTR is I forgot, it's a lot smaller than Nvidia for sure, right? I forgot how many times smaller. But their trade volumes are actually comparable. Like MSTR has some very high daily trade volumes, right? The fact that you can actually compare to Nvidia's trade volumes is what is bonkers. And the fact that MSTY pays dividends of, you know, anywhere between $2 to $3 on average compared to their Nvidia options ETF, which pays somewhere between, you know, 1 to 2.5 or 2.6. That's kind of interesting. That's very neat. I wasn't expecting a difference. I would have thought, you know, they'd be comparable maybe, or maybe Nvidia would be higher. But turns out not so much. That is interesting.
Yeah, so I mean, like it's really ranges a lot. It depends on the structure. Like still, Nvidia itself, the company itself, is one that produces something. There's a product that's being manufactured, right? Not so much for MSTR, right? So it's just in terms of trade size wise, like there's a big discrepancies there because of their I guess the value of their company, right?
Market cap.
And of course what their annual sales and stuff like that are. So I would I would think that Nvidia is really part of the more traditional type of company where they are really trying to
tech.
Be a growth company, tech company, and then I guess YieldMax itself is trying to play on their volatility to create this new product, right? Yeah. Whereas MSTR is the game right now is to create volatility, right? Their product is buying Bitcoin
on purpose,
and so it's sort of an unknown, right? In terms of like how this will extrapolate for a stock, or sorry, for like a ETF down the road. And that part's interesting, and I do want to also say, you know, a little bit on the flip side is, and you kind of touched on it, is the risk aspect of it.
Yes.
Like we don't really know. I mean, I haven't studied MSTY that much. I don't know what possible risks there could be. There definitely will be some risks if there's such a you know, good dividend payout amounts, right? But how likely those risks would come up, or, you know, how much of it would it swing the dividend payout, I think is the key question. You said that in the last month you saw a certain return for dividends, so that means
let me give you some
stats,
stats, right? Like, because again, before we we'll get back to this specifically, but just to give some stat comparisons between NVDY and MSTY for the Nvidia option income ETF, their dividend yield is at 47% approximately, let's just say, okay? Comparing that to MSTY, MSTY's dividend yield is 91%. All right? Keep that in mind for a second. Going back to NVDY, their annual dividend is $10.78. For MSTY, their annual dividend is $27.35. That is some impressive delta there in terms of the two. Now, obviously, I don't think either of us knows enough to be able to explain it. But the fact that YieldMax's MSTY ETF is able to generate more dividend and more dividend yield and more annual dividend payouts amount wise, value wise, off of MSTY, I mean, that kind of blows me away, because I didn't quite look at this prior until now. And then circling back to your point, because we were saying, hey, we don't really know what the risks are. I just quickly typed into ChatGPT, just you know, to give us at a high level. I'm not going to read the whole thing, but just to call out what they are, right? ChatGPT is listing out market risk, sector or potentially industry risk. There's liquidity risk, tracking error risk. They might not be able to track the huge spikes, if there are any, with MSTR. There's interest rate risk, inflation risk. Well, that's everywhere. Credit risk, sure. Currency risk, okay. Concentration risk, management risk, definitely. If their algos or whatever human resources aren't performing well, that could affect the yield. Regulatory risk, yep. We don't know what the new administration's gonna rule on these things. That's always a potential. Volatility risk, well, that's a given. Dividend risk, yep. Valuation risk, reinvestment risk, geopolitical, okay, that kind of goes for everything. Counterparty risk, definitely. And yeah, there's at least 17 of them. I'm not going to read through each one as definitions, but I would recommend anyone interested to use ChatGPT. It is free up to a degree, and then you can ask ChatGPT to give you a summary, and it'll list it out. Now, obviously, follow that up. You can also read their YieldMax's documentation. I forgot the name of it, for each of the ETFs that they have, right? Just to better understand it. But yeah, that's interesting.
Yeah, I think, like those are all very valid points. I think those cover that doesn't necessarily just apply to MSTY. It applies to almost any other stock out there.
Sure. Yeah.
Like just in terms of a safety net, right? I mean, all those things can impact any type of company out there that's traded publicly. I'm more, for me, I would personally look into a little bit more of like the management side of things. I mean, I think that might relate back to like, for example, if Michael Saylor changed his vision for his company, that would be big, right? That might change the whole how MSTY gets its volatility and therefore gets its yield. That could alter it. The one thing about dividend stocks is that once they're not able to perform to continue to give the dividends, and that's why there's that title of dividend king, is because they've been able to post a track record for a very, very long time that they can continue to pay out dividends. Once your stock no longer provides dividends or there's a blip, people flush out more so. And it doesn't necessarily mean the company's doing bad. It's just that they know that ETF is not performing anymore, then they flush out. So that's what I would be more concerned about, I guess, is if something led to them being inconsistent in their dividend. Because I think dividend plays are all about consistency. And if they are able to maintain a high yield forever, I mean, more power to them, and that would be great. But my worry is that something causes them to lose that ability to do so. So I don't know. Like that's probably
fair.
the biggest question mark
that's
for me.
Fair.
Yeah,
especially right, because they're barely even a year old. Like it has come February, would they? I mean, at least for the ETF MSTY perspective, right? I was just again asking ChatGPT like who runs YieldMax, and it's basically saying it's part of a company called Innovator Capital Management, and the CEO is Bruce Bond. Okay, great. And then I asked ChatGPT, hey, what's Bruce Bond's career performance track record like? And it lists a whole bunch of things where it indicates that he's the co-founder and CEO for Innovator Capital Management. They're focused on providing various ETF-like instruments specifically for investors, right? So this would be in line with what they would be offering or doing. And yeah, it looks like there's a good amount of detail here. I'm not going to go too far into it. But again, it's something worth digging into, right? Just to get you're right, like to be able to study who are the people behind it. What do they have a good track record? What are they known for? Yeah, for sure. Their management aspect is always a risk factor.
So I'm gonna go back to something that I used to look into because it was fun for me, which was mining stocks. Because mining stocks are a lot of fun to trade if you do daily trading with it. I'm not a daily trader by any means, but it's very fun to track and look at because they change a lot in a very short period of time. And so I just sent you a link quickly over there. You can take a look at it right now.
Right.
So
right.
I'm doing a search on dividend yields for mining companies, and there are a couple of mining companies that yield like 90 to 99% dividend.
Wow, like
as well.
Annually, you were talking about like.
Yep.
Okay.
And the link I just sent you shows one of the mining companies dropped by 99% dividend yield as well.
That's extremely. Yes, I see it.
So that's where that volatility comes in. It's like because what's wrong with a mining company? And I don't want to even begin to understand why a mining company would have dividend yields, but maybe it's just one of the ways they structure the company, right? But you would think, because the whole point of a mining company is if they hit a mine, and they hit the mother lode, then
Mm,
they're able to pay out any amount, right? But if they don't, then obviously there's no more faith in that company to just
right.
all of a sudden find something that of value, right? So
Yeah.
then the dividend is going to go to zero. So I'm not
Oh.
saying MSTY is going to be like this, but it sort of reminds me a little bit
Right. There
something
are
like
things
this.
like that out there. Right.
Yeah,
Exactly.
exactly. That's what I want to. That's what I want to point at and
Hmm.
kind of
That's
discuss
very neat.
and look into. Just
Yeah.
keep that in mind. Like there are other things like that look similar.
Yeah.
Um, and so maybe we can use that to help us understand, or at least better prepare us for like, hey, don't go all in on this, right?
Yeah. That.
Play with it within your means, and then it's the same type of reasonings, right? Like, if you can lose it, then great. If you can't, then don't invest in it, right? Because you never know. So
Yeah.
yeah.
And I'm looking at this the chart you sent me, and that volatility on that particular mining stock, that's pretty bonkers. I would say that's
It
volatility to the
just so happened that
downside.
when I was looking at, yeah, it was
Right.
by
Yeah.
chance, right? But like, and not
Yeah.
all of them are like that. Some of them
No.
pay very low dividends,
Sure.
right?
Yeah.
Some of them don't go so crazy, right? But some of them do go nuts, right? So
Yeah.
like,
That's
there's a
pretty
lot of different
scary.
things out there that is pretty
Yeah.
interesting to kind of look into,
Yeah,
for
I,
sure.
I agree. I
Yeah.
think I think with anything new, right, you want it to prove itself. Like similar to Bitcoin, if it wasn't around for already like 15 or so years already,
Yeah.
I would
Yeah.
suspect a lot of people would still be highly skeptical. I mean, and that's normal, right? I mean, if something's only been around for like say 3 years, you still would harbor some type of skepticism like towards it, just in case because it's like it's still so nascent.
Mhm.
But because
Yeah.
Bitcoin's been around for 15 years, there is a proven track record, so to speak. Now, obviously, past performance is not an indicator of future performance, but at least you
Mhm.
got 15 years to look back on. Whereas something,
Yeah.
such as MSTY, it's not even a year old. So yes, it does beg the question: how well will it do? And I think in a similar episode prior, I also mentioned the fact that, I mean, when we're in a bull market, and to be
Yeah.
honest, when MSTY was first introduced February of last year,
Oh
um,
wow. Yeah. Perfect timing.
it already was on an upward trend, right? All
Yeah.
of
Yeah.
2024, looking back, it was a slope upwards. So when you introduce anything in a bull market upward trend, everyone's gonna be a winner. That's easy, right? I think the
Yeah.
difficult part is to see how exactly MSTY performs when we hit the full on bear market. I mentioned in a prior episode that I had a friend that mentioned that he believes that
Mhm.
with
Yeah.
MSTY type of ETFs, it should actually do decent even in a bear market, as long as as long as there's volatility is I think his
Right.
point. Yeah, because you're
Yeah.
capturing the I guess the delta, I believe, right? But hey,
Yeah.
again, I'm not an expert in this stuff.
Yeah. No, I mean, you're right. I think, and by definition, I think capturing the delta just means the swing between the ups and downs, right? I think
Yeah, the
that's my
volatility is what I
understanding, right?
meant. Yeah.
Yeah, the volatility, right? So you're right. So basically the people that are playing the game, that are the fund managers, that are supposed to know what they're doing, if they're able to do their job correctly, and MSTR continues to keep its volatility very high, you're right. Up or down in the market, bull or bear market shouldn't really impact the dividend payout because there's still ups and downs
Yeah.
within
To trade
that
against.
sector or
Yeah.
within that vehicle,
Yeah.
right? So very, very true. But one thing may drop is that, like, just like Nvidia and stuff like that, where they pay a certain dividend and so forth. When the economy is bad, and this might not in fact affect MSTR, which is great, is that actually it may. I don't know. We'll get back into that
It
for a
may.
second. But what happens is that if people don't have much money because the economy's on a downward turn, they tend to buy less or use less of those
Right.
products that are being made by the
Right.
company. So even the company is very good, is making excellent product, no fault
Of
at
their
them
own.
whatsoever.
Right.
That's where the risk comes in. Is the environment
Correct.
changes and they go into loss. So the only risk right now would be like that could change things for MSTR and not MSTY is
Yeah.
that people still view Bitcoin as a risky asset, right?
Yeah.
And so when things don't go well for risky assets, money gets pulled out of the market, then it could cause MSTR to go down in value based on the fact that they hold Bitcoin and
Yes.
it's considered a risky asset.
Yes.
So I don't know how much of that would play on the volatility level of MSTY. Because if you think about it, once Bitcoin, let's say, does drop back down a
Sure.
bit or whatever,
hmm
then would people trade less of MSTR because of that?
I don't think
That could be a
so.
risk.
Well,
But
okay,
we
sure.
don't.
Yeah,
Yeah,
I get what you
yeah,
mean. I personally don't think so. I think that volatility, regardless of if it goes up or down, as long as there's volatility, and that's what MSTR is selling, as their so-called product, but at least from a stock perspective, right?
right.
Um,
Yeah,
I don't think that volatility will decrease because of the fact that it's in a way anchored to Bitcoin. So Bitcoin's not going to be any less volatile anytime soon.
yeah,
And to your point you were mentioning earlier, although potentially I from what I understand, most Bitcoiners view Bitcoin as a risk-off asset, meaning they see it as a savings vehicle, a safe harbor, right? Where the rest of the world, the currencies can decrease in value, but because Bitcoin is fixed, so on and so forth, it holds its
mhm,
value, right? But the rest of the world that aren't Bitcoiners, they don't see it as a risk off asset. They see it as a risk on
that
asset, right?
totally,
And
totally. Yeah,
therefore, it's also been mentioned in various by other people and other podcasts that
yeah,
Bitcoin is actually a level one market indicator because it trades 24/7, 365. Whenever
yes,
anything
yes,
does happen globally, it is the
yeah,
first to react. And then the rest
right.
of the stock markets follow because they don't trade 24/7, 365. So if there's some kind of war that breaks out in some foreign country somewhere, the
Yeah,
people over there know they instantly
mhm,
need money. If their assets are in Bitcoin, they're gonna sell because they need to use it for whatever purpose, potentially, right? I'm just making it up.
yeah,
And so that could cause a price drop. Or people that find out that there's a war there, the associated companies that might be impacted, people that are going to trade against that or whatnot, they'll also, play with that aspect of it in the Bitcoin market. And so that's why Bitcoin, and I would agree, it is a level one indicator. It is the one thing that never sleeps and gives you an exact pulse on the global market because of the reactions, right?
yeah. No, I totally agree. I think as a Bitcoiner and everyone else is a Bitcoiner, we understand that Bitcoin is actually a risk-off asset. But there's just too many people still out there right now that still think it's
Absolutely.
the other way.
Yeah.
And unfortunately they have more buying power than we combined have, I believe. At
Agree.
least the ones that are publicly talking about it, and not the whales that are hiding behind
Yes. Pulling
curtains buying
strings.
Bitcoin, right?
Yeah.
Right, exactly. And just a little bit of off topic or maybe connected. I don't really want to go into this too much because I know we're not really talking about political stuff too much. But
Sure.
if you think about it, given the current dynamics of the political structure out there in the States, right? I mean, what's stopping the next president to say to MSTR, hey, you got to sell some of your Bitcoin, right?
Oh yeah.
Like,
Yeah.
like, and,
Absolutely.
and there could be an argument about that,
Yep.
but he could just ask
Yep.
publicly,
Yep.
hey, MSTR,
For
Michael
for the
Saylor,
for the greater
you
good.
you need to, for the better good, you better
Yeah.
sell some of that Bitcoin. Now, see, that's the stuff that we're like, oh man,
We don't know. Yeah. How's that gonna
like,
unfold?
yeah,
Right.
how's that going? Because like, we all have a certain amount of faith and trust. I would say in MSTR. That's what we hold MSTR,
Mm.
and so like, but that's out of their control, right? I
Yeah.
mean, look at Google, look at TikTok. Like they are
Exactly.
they've been going through the ringers with like
Exactly.
the political side of things, right? Um, so yeah, like what is once again, when you're a company and a physical structure, you are held liable to the rules of where you hold your business, right? And it's just one of those things where we don't know, like as much as
Yeah.
Sailor doesn't want to change, right? And he wants to continue his course, he may not be given the leeway to do so.
Yeah. Politics.
And so when people look at Sailor, I don't know, I read some other stuff about like how like, oh, why is he so playing the how should I say it? Why is he on such good terms with the new president or whatever? Well, it's because he's still running a business, right?
No, of course.
at the end of the day, the person that's controlling the country or has big influence on the country, you gotta be in good terms with them because they can make your life hell, right? They can
Oh,
also make you a lot of money depending on which
yeah.
side you're on, right?
To your point, I don't know if you've heard, right?
Oh, okay.
Trump is or has or will be
Yeah.
unbanning TikTok.
Yeah. I
And
heard about that.
there's
I heard about that.
currently rumor on news and stuff saying that that part's not rumor. The fact that as part of the deal to bring TikTok back, actually Trump said it in his rally,
Yeah.
I think just today. He's saying that the TikTok will have to pony up 50% of its ownership to an American
Yeah.
investor.
So
And then all of a sudden
yeah.
there is rumor that Elon Musk may very well be one
I
of the
heard about that.
contenders. Now we all know Elon is part of the Department of Government Efficiency, Doge, right?
Yeah.
And so there you have it, right? There is all of a sudden it can make you very
That's what I
rich
mean.
too, right? Exactly to
Yeah.
your point. Yeah. So I mean I don't see it as a I mean anyone in Sailor's position, you're gonna want to make sure you're in good tidings with the new administration, right? For the good of your own company, to help educate the new administration coming in terms of the benefits of Bitcoin and why it's important. But it goes both ways, to your point, right? If suddenly something changes and strategically simply printing more money or selling gold from the U.S. Treasury is not good enough, they need more and they need it faster. What's stopping Trump going to Sailor and going, hey, I need you to do me solid, right?
Yeah, because who's holding all the Bitcoins? Coinbase, right?
Exactly.
Coinbase, right? And who I don't know. I don't know the CEO of Coinbase as well as I know Michael Saylor in terms of the publicity he's done.
Brian Armstrong,
right?
yeah.
So the thing is that who knows how easily he would just change directions and be like, oh, here you go, government. Here's all the Bitcoin that I've been holding. Like, I'm not saying he would. I mean, that causes more problems.
Let me riff off of that a little bit here. Our Brian Armstrong, back in the days of the block size wars, he was on the side or on the camp of increasing the block size.
Yeah.
Right? And now people can fact check me on this. This is based off of what I read in the block size war book, right? A really great book about the history of that period of Bitcoin and the battle for whether or not the block size should be changed. And the miners were all for it because they felt that a bigger block size meant they could make more money through more transactions per block, right? Makes sense, right? But the downside as to what the hardcore Bitcoiners were advocating against was if you do that, then eventually it'll become something like, the Ethereums or the whatever's out there where the block is so big, no one else can mine it at home. And that then becomes centralized again. And that was the fear or the concern, right? And hence the outcome was that the Bitcoiners, the hardcore Bitcoiners won. And they were able to come to basically bringing in, I think, the SegWit as basically basically a way to kind of give a little bit more block size increase slightly without having to dramatically change it such that, plebs can't mine it anymore at home, right? So they kept that decentralized aspect intact while still being able to increase the block size a little bit, right? And that kind of, it was the best of both worlds, so to speak, but it was still more in favor of not changing the size. It was to optimize the block so that it gave a little bit more free room for some extra transactions, right? So the size limit of the block itself didn't change. So that's very historical. And from what I read, Brian Armstrong was on the side of the miners who was advocating for, let's make those block sizes bigger. And so, to your point, 100%.
Yeah, so that's stuff we can't control. And obviously, I think in history, people that invest always look for the country that's most stable to do their investments in because of these type of situations where you don't want to have a regime change every month or something like that, and then all of a sudden like your money and stuff like that, the stocks are all gone, right? And that's why people trust the United States to a certain degree and invest a lot of their money in the stock market there for a reason. So that's why it's very unlikely Trump or any other government in power would be like, hey, hand over all your Bitcoin, because then it show that, hey, you're
Yeah,
no
there's no
longer
trust.
democratic country.
Right.
You're now like
Communist
whatever, right? I
or
don't want to,
whatever.
whatever, right? It could be
Authoritarian. Yeah.
totalitarian, whatever, right?
Yeah.
Like, so um,
Yeah, I agree with
just
you.
points out that it's never gonna be 100% quote unquote safe, but
Right.
they may do things like, and it, like, like the whole TikTok thing, going back to it again.
Mm-hmm.
They went full circle to saying they're not doing anything until it actually is being bought
Exactly.
by Elon Musk or someone else. It's
Exactly.
still not banned. But the whole turmoil of that whole thing caused a lot of influencers, a lot of media
Sure.
creators to lose jobs,
Yep.
jump ship, uprooted so many people's livelihood. Like, all that stuff caused problems, right? And that would be the same as if right now somebody in power came out and said like, hey, you know what? Tomorrow, you gotta give over all your Bitcoin to me, or half of it, right? Every
Yeah.
company that holds it, I need half of it right now. Otherwise, you're not you can't do business here anymore in our country. That's huge, right? Whether or not they follow through of it doesn't matter. The fact that they say it is I think the biggest uh politically, the power they have over that is really strong.
Well, I think what you remind me of the fact that it came full circle from being banned to unbanned. Can you imagine the stock price? I was trying to look up if they're even traded, but I can't
Not
seem
here,
to.
right? Only
Yeah, I think it's under
only in China.
ByteDance.
ByteDance.
Yeah,
Yeah.
stock ticker. Let me see if I can find it. Maybe it's only traded in China, but you can imagine even over on that
Oh, yeah.
side, it would have caused that price to go all over the place. But yeah, like exactly to your point, it could change on a dime. And like, how long was it between it being banned to being it unbanned? Was that literally
Well,
a
I wasn't
matter
even
of
keeping track. It was pretty quick. I mean, it
it
was
was
one of those
a
things that
couple
was
months?
like under the Biden administration. I think they that was their whole that's what they were trying to achieve. It was to do a banning of it for one reason or another.
Yeah,
And then of course, near the end of it, this wasn't really make sense, and then kind of changed to like not anymore. I don't know. I don't want to begin to say I understand the U.S. politics
yeah,
enough to kind of give my own opinion on it. And if whatever opinion I give is probably wrong anyways, because there's just too many sides to
yeah,
the
of course,
story,
yeah,
I'll probably end that there. And I think, just to recap, I think really it's kind of looking at dividend pay,
hmm
and how valuable it is and what risks there are in this type of investment vehicle. Definitely worth looking into, especially MSTY. I'm very excited about it. I really want to look more into it and see if it's something that has a good future, or possible good future.
hmm
And then of course, putting my money on it if that it is right.
right.
And kind of maybe we will reconvene at another date to check up on that
Yeah.
status.
In a prior solo podcast episode, I have intentions to basically do a how it started and how it's going type of
Right.
update semi regularly, right?
Awesome.
Obviously,
Awesome.
we
Yeah.
have to kind of let months go by to kind of see more of a track record. But I think the
Yeah.
key point is right now is the expectation wise in the Bitcoin space at least is for the next 12 months approximately, we're still in the bull cycle. So it
Yeah. Yeah.
it can't potentially it can't really be that bad. It's when we get into the bear cycle that's where I'm most interested in paying attention to. Is I want to see, are they able to continue to do what they do, and potentially maybe the dividends could be the same, or maybe the dividends payout is slightly less. Who knows,
Yeah.
right? But I think we have to kind of live through that to kind of see and track. And as usual,
Yeah.
I'm going to be using a very small fraction of my investment portfolio to have skin in the game. That way, I can actually report realistically what my experiences are. I know
Yeah.
from a very, very abstract way with the so-called, the 6 shares or whatever I had for the last, 6 to 7 months. It's done okay, right? It does follow
Mhm.
the dividend history that I saw on the charts based off of what I saw going into my accounts.
Yeah.
So to me, whenever I read stuff online about whether people are loving it or hating it,
Mhm.
it allows me to at least step back and go, well, wait a sec, what was my experience, right? Well, obviously, my risk is very low. 6 shares, approximately is, or 5 or 6 shares is really not much, right? But
Yeah.
I'm able to see over time whether I am actually getting those type of dividend payments or payouts,
Yeah.
and and experience it. And it's one thing to speculate and not have any skin in the game, and it's very differently when you actually have skin in the game and you can actually look at it more objectively
Totally.
using your own data. Yeah.
Yeah.
But yeah, fully
Yeah.
agree.
No, it's good to keep track of that for sure.
And yep, we'll give updates on that. Okay, cool. That sounds good. I guess we'll stop it there for today.
Yep. Sounds good.
All
Thank
right.
you.
Thanks for your time. Bye bye.
Yep.